So what the hell happened last week? If you looked at your portfolio on Friday and saw it went down 20, 40, or even 80%, you're not alone. We just witnessed the largest liquidation event in crypto's history. Nearly $20 billion wiped out in a matter of hours. And here's what actually happened. So it all started with China's imposing rare earth minerals export controls. Then we had Trump announcing 100% additional tariffs on China. Markets panicked and volatility went up. Bitcoin dropped 16.6%, but some altcoins, they fell 80 to 85%. Even Atom literally went to zero for a few moments. The narrative that you see on crypto Twitter is that tariff fears crashed crypto, but that's not what actually happened. This wasn't just about tariffs. Tariffs were only the catalyst. This was about excessive leverage meeting low liquidity during a coordinated manipulation event. Whales were piling into shorts right before Trump's announcement. Coincidence? Unlikely. What we saw was an automatic deleveraging event, a nuclear option that exchanges use during extreme volatility. It forced the closure of all leverage positions, long and short. $20 billion in open interest just disappeared. The perpetuals market completely malfunctioned and order books broke down. But here's the interesting part. The actual blockchains, they held up really fine. Minor congestions, but DeFi weathered the storm. It was centralized exchanges such as Binance, Bybit, and Coinbase that actually broke. The system that's supposed to replace traditional finance just proved that decentralized infrastructure is more resilient than centralized platforms. The damage reports are still coming in, and I guarantee you that some of them will not surface until after the bull market is over. Big players definitely did blow up, and market makers did get liquidated. But they won't tell you, here's what matters now. Retail isn't even here yet. Right now, it's just crypto natives and institutions. And crypto natives, we're definitely not leaving. So everything depends on how institutions interpret this event. Do they see it as a stress test that DeFi just passed and CeFi failed? Or do they see the prices dropping 15 to 85% in minutes and decide that crypto is still not ready to be the next evolution of the financial system? The next few days are critical. If institutions view this as a validation of decentralized infrastructure, then the bull market is still on. But if they see this as a warning sign, this might be the top for this cycle. One thing is definitely certain. The leverage and sentiment are now completely reset. The market is cleaner, and for those speculating of an upcoming altcoin season, this might be exactly the reset that they needed. Starting with the macro and specifically the monetary policy. So Fed is right now cutting rates while markets at all-time high and employment remains stable. This is highly an unusual environment, signaling the end of the big debt cycle that Ray Dalio speaks about. Ray Dalio is the founder of one of the biggest hedge funds on the planet, and he spent all of his life studying how empires rise and fall, and also studying debt cycles, because civilization basically moves in debt cycles with rising empires and then falling empires. Right now, we are at the end of one of the big debt cycles that usually takes around 80 to 100 years. And in this kind of environment, you have the empire that's taking so much debt to a point where we are on the cusp of a major deleveraging event. So this deleveraging event could come as a deflationary shock or an inflationary shock, and the most likely outcome would be an inflationary shock. The only way where governments will be able to get themselves out of this big debt cycle would be to basically deleverage. But this deleveraging event will come as an inflationary shock. So in order for them to walk away from the big debt cycle, they will have to debase the currency and monetize all the debt, which is right now sitting at $37 trillion for the US government. And when they basically do that, it will be translated into inflation and currency debasement, very similar to what we have been seeing in Japan for the past few decades. Historically, government shutdowns eventually caused the dollar index to fall, which could be bullish for crypto and stocks. Government shutdown is good until it's not. It's good at the beginning because it weakens the economy and it weakens the nation that actually did this government shutdown, in this case the US, and this definitely will cause the currency of that nation to also fall at the same time. That's exactly what we've seen since October 1. So you can clearly see that there was a fall in the dollar index, but since the France crisis happened and since the new election in Japan, the dollar did spike up again. But what you guys need to know right now is that the longer government shutdown lingers, the riskier it will be for crypto and for macro markets. Why? Because if no economic data is coming throughout the whole month, and then suddenly you have all this rush of economic data coming back in, and especially keeping in mind that there is a huge gap between the next time economic indicators will come. So there definitely can be a lot of changes that happen during this period that are not priced in. And if this is the case, then expect a lot of turbulence once economic data comes back in, especially if this economic data is not good. The longer the government shutdown, it will create a risk directly tied to the crypto market, and that is because the market structure bill, ETFs for altcoins are currently on hold until government is back to work. The longer we have a government shutdown, the longer that the crypto cycle will be pushed out. And what scares me the most is that I think that the economic activity right now is weakening, and the longer we wait for a crypto to have a blow off top, the less chance there is to actually have a blow off top and an altcoin season in crypto. What scares me is that this weakness in economic data and the recessionary fears will be pulled forward along with actual weakness in the labor market. And if this happens, then you can definitely forget anything about altcoin season. So I want an altcoin season to happen right now. And hopefully that will last a couple of months before we see unemployment spike up due to government austerity, basically reducing government expenses. And this is basically the plan behind Trump standing very firm on the budget and the government shutdown debacle that we're seeing right now. So this is what he wants. He wants less and less government budget. He wants to cut the budget, and having a government shutdown and firing, I don't know how many employees, federal employees, is definitely in the best interest of Trump. The risks of having an unemployment rate spike and recessionary fears coming in that will eventually stop the bull market in crypto in its track are rising, and the longer we wait, they will keep on rising further and further. So for me, I would definitely like to have this government shutdown thing done with, so that the SEC can go back to work, approve altcoin ETFs, and the Senate go back to work, and then finalize the market structure bill the soonest possible, so we can have this blow off top, and then after that, we'll see what happens. But from a cyclical perspective, it seems as if right now we just entered the last phase of the crypto cycle, and it should last between 1 to 2 months. So basically October, November, December, and this will be the top for this cycle. So mass furloughs could spike unemployment numbers and trigger growth scare once data resumes. Moving on to the economy, so we see right now job market weakening, even though we don't have the data. Limited data that is currently available to tell us this, but signs of deterioration is mounting. So we see that Moody's chief economist Mark Zandi warns US is on the precipice of damaging contraction. Job losses are mounting in manufacturing, farming, transport-dependent states. High-cost states like Georgia seeing population pullbacks. AI ecosystem right now is sustaining this bull market, but fundamentals are questionable. And this is why. So AI companies are engaging in something called circular financing, where investors funding AI companies that buy products and compute from those same investors. And this is called seller financing. Basically, they are funneling all that money between all this ecosystem of AI companies that will artificially inflating the revenues of these companies. So these companies are spending so much money on capital expenditure to build these data centers and the training for AI models and all of these things. And the revenue at the moment is still not keeping up with the expenses that they are spending. The revenue that AI companies are making compared to the expenses and the capex that they are spending in the economy, there's a huge gap between that. And right now, in order for them to keep inflating their revenues, they are using seller financing. Once all of this flywheel stops, expect the AI bubble to burst. So this is definitely a risk that we need to keep in mind, and it could blow up any minute now. It could blow up tomorrow. It could last 6-7 months. It could last well into 2026. It's really difficult to know when the music will stop, if you want. But it will definitely stop in the future, and this bull market is not going to continue forever. The options volatility at the moment is also rising, but it's not exuberant yet. The environment supports continued upside in the short term. Let me show you really quick here the volatility. If we look at the volatility index, for example, Bitcoin, but it's also the same for the equities market. So if I zoom out here, you can clearly see that the volatility of BTC has been falling down. And usually when we see spikes in volatility similar to these ones here, and recently also on Friday, we saw a spike in volatility. This means that there is exuberance in the market. There is a lot of FOMO in the market. And this usually coincides with blow off top or a local top at least. So minus the event that happened on Friday, we did not yet see the spike in volatility that signals that we are forming a blow off top or we are forming a local top. Meaning that even when BTC was at 125,000 at all-time high, basically here during this week, volatility in relative terms was still low, and there was definitely still a lot of room to go from here. Despite all the flash crash that we've seen in the crypto market, Volatility is still not yet high, meaning that there is still room to go, and there is definitely still room for a blow-off top between now and the end of the year. As much as there is risk, macro risk in the market present, as much as also there is a risk of a melt-up. So it's like a 50-50 chance where we are right now standing in the middle, and we can tilt in any way, any day. We've seen a historic liquidation event of nearly $20 billion liquidated in hours. This is the largest in crypto's history. Open interest fell 23 billion in just one day when this event happened, representing a complete leverage reset. So this is the open interest in the futures market. And you can clearly see here, if we zoom in, on 10 October, open interest was at $90 billion. And then when the flash crash happened, we went down to $70 billion. That's a $20 billion of open interest just wiped out in a few hours. This is definitely a market dysfunction, deep malfunctioning of order books, liquidity, and perpetuals market, especially amongst centralized exchanges. We also saw something called automatic deleveraging events on major exchanges, which closed all leveraged positions, long and short. What you guys need to know is when Trump actually made his comments, it was in a very critical period where liquidity was not very strong. And as once you have so much leverage in the system, this is typical of a price squeeze. And this is what actually happened. So when the news hit, there was so many people on the same side of the trade that eventually it overwhelmed order book and liquidity. And it caused a cascading events of liquidations. It was so big that it overwhelmed the order books and the liquidity of market makers. And it forced them to do something called automatic deleveraging event, where they basically liquidate all positions. Everybody got liquidated. So if you had an open position, you would have gotten liquidated. On certain exchanges, even stop losses didn't work. So even if you had a stop loss, your position got liquidated. But Binance did come out after this event, and they said that they will be compensating all the people that actually were victim of this deleveraging event, which basically were around 280 million or something. So that's good, I think. And for the people that don't know what auto deleveraging is, I put a full thread explaining what it is in the show notes. So feel free to read it after this call if you are interested to just understand the mechanics of what actually happened and what auto deleveraging actually means. Looking at on-chain health and recovery signals, right now we don't have any fundamental warnings when it comes to blockchain infrastructure. So on-chain indicators such as MVRV, price drawdown from all-time high, hodl waves, all of these, we're going to be going through some of them during the analysis for crypto. All of these indicators did not show any warning signals. The crash was purely related to leverage and not spot-driven. We saw strong buying during the crash, indicating conviction. So there was a lot of capital allocators that were buying the dip, which is also very good. The clients of BlackRock were actually buying the dip on BTC. Full reset creates healthier foundation for the next leg up. So we had a full reset of all leverage positions in the crypto market, and also fear and greed index went into extreme fear when this happened. This is a great sentiment and leverage reset that should place the foundation for the next leg up. Liquidations map right now are also showing us that we right now have more pain to the upside rather than to the downside. This is the 7 days liquidity. This is 30 days liquidity. You can clearly see that there is more pain to the upside than to the downside, signaling that price should move in this direction in the future. So what does all of this mean for our crypto portfolios? First of all, government dependency. Most major crypto catalysts contingent on US government reopening. We need the government to reopen in order for crypto-related catalysts to come in and usher in this final blow-off top of this cycle. If we don't have government resuming work and we don't have these catalysts, it's very difficult to see what kind of catalysts that will push us into all-time high again. If this doesn't happen, then the most likely outcome will be chopping sideways. And the risk is that if we keep chopping sideways long enough until macro risk plays in full force and will basically usher in the next bear market or the next phase of the cycle, where we basically enter into a 6 months to 1 year period bear market. We need the government to reopen and then approve all of these altcoin ETFs and also the structure bill in order to push us into the final phase. The preparation mode right now, crypto industry is positioning for inevitable improvement. So we see Coinbase right now adding DEX support on Base, MetaMask integrating Hyperliquid and Polymarket, and all of these institutions opening up to crypto, banks opening up to crypto, EU sovereign wealth funds also allocating to crypto. So things are definitely preparing for this Q4 mania. The potential timeline is some catalysts suggest BTC top could come in as soon as October 20. This is still possible even despite post-liquidation events. And this is the chart that actually showed this clearly. This is the timeline from the halving to the top that happened every single cycle. The first cycle we've seen 52 weeks until halving to top. The second cycle, it took us 76 weeks, and the third cycle, it took us 80 weeks. So if we take the biggest, the 80 bars will fall on 27 October. We are right now 13 October, 2 more weeks until the cycle top is in. If we look at 52, the cycle top is already in. But even though we can clearly see here that we did move higher after 52 weeks, meaning that this is not relevant anymore, we are still looking at bar at 80 weeks, which should end at 27 October. This is from halving to top. Right now, let's look from bottom to top. So this is from each cycle, bottom to top, starting with the second cycle. So we had 152 bars from bottom to the top. The next one took 153 weeks, and the third cycle, 152 weeks. If we project this out right now, 152 weeks put us at around 13 October. We are right now entering into the last phase of the cycle. And keep in mind that cycles do rhyme. They are not exactly the same thing, but they do rhyme. So there might be a couple of weeks difference between different cycles. But what you guys need to know is that we are extremely close. From a 4-year cycle perspective, we are extremely close to the top for this cycle. This is the second indicator telling us that we just entered the final phase. It's either we topped already, or we are topping in the next few weeks. So this is the third indicator, top to top. The first one happened in 213 weeks, second one 205 weeks. If we project this from the last top that happened on November instead of March, it should tell us that the top should have been in either 29 September or 1 December. So this is why we keep on saying that we just entered the last phase of this cycle. And we don't really know when we're going to be topping out. Personally, I don't think the top is in. I hope not, even though the macro is making me extremely anxious. Nevertheless, we still have these 2-3 months coming in, October, November, December, in order for us to have a clearer image if we have a final low off top or the top is in for this cycle. This is also something that we really need to be aware of. Currently, we are in Q4 of the 4th year of the crypto 4-year cycle. So the cycle top is likely between now and December. Potential timeline, as I said, some analysts suggest BTC top could come as soon as October 20, so next week. And the history suggests that altcoin rally for a few weeks after Bitcoin tops. So if Bitcoin top in this week, between now and 20 October, potentially until beginning first week of November, then expect altcoin season to come in November, potentially lasting until maximum December before the top is in and we roll over again. Right now, we are dependent on catalysts, so cycle top will likely coincide with specific bullish catalysts similar to the one we've seen in previous bull market, as I mentioned a few minutes ago. Now is the time to be very much long, but with necessary hedging. And the biggest indicator for that is the flash crash that we've seen on Friday. If you're not hedged, you can get wrecked, especially in this time of the cycle. You need to be hedged properly in order for you to be very long. Otherwise, you'll be taking excessive risk. If you do not have any hedges, it's time to start taking profits, especially if you are up on your positions. This is basically what has happened in the market last week and the major dominant narratives that we've seen. Everything shared in this recording is for educational purposes only and should not be considered financial advice. The strategies, insights, and opinions expressed here are meant to help you understand the market and build your own perspective, but ultimately, all investment decisions are your responsibility. Digital assets are highly volatile and carry significant risk. Always conduct your own research, seek independent advice if needed, and never invest more than you are willing to lose. Freedom Capital does not guarantee outcomes, and past performance is not indicative of future results.